Good morning, all. Hope you're doing well. So really, the risk calc has been on for a long, long time, and the technical risk calc is really high as well. This would be a point where I would potentially be taking profit on my longs, on my indices, and what we're going to try and do is wait for this number to get nice and low, and then we're going to look to buy the dip. But there's no point buying now because if we're going to take profit at 90, it's not really worth doing so much. If you buy at 15, 20, and then take profit nice and high, then you're going to make a lot more profits. I don't think it's advisable to be buying right now, but there could be some gas left in the tank. We can see the sentiment is very much risk on. There's 20 people selling indices versus one person buying. Now, what we have seen historically is that we see it get to about 20, minus 23, minus 24, and the bears just like give up completely, and they just, their account gets blown up and they reverse. And if they don't, if their account doesn't blow up, they'll simply reverse en masse. If they go long, then we'll be at the top. Okay, so it's all to do with the sentiment, and obviously there are fundamentals in play, but you could argue fundamentals are being ignored. Look at the yield curve. That is a very much a risk off sign, and I think it's really just coming up the indices because of the sentiment. This is why the sentiment's probably more powerful than the fundamentals, because there's the narrative and the driver and the logic for the move as well. Because they're selling it, it creates a demand, right? There has to be someone to buy it. If someone's selling it, there's got to be an entity to buy it. Okay, so that's been reset at 85, and we'll just have to see how we go. Let's talk about the robot. Get that across. Double click, and we've got some EU trade which might get to SL. Yeah, so we are a little bit in drawdown, and so ideally for the robot we have what we're seeing is detecting some Aussie weakness, which is interesting, and we'd want the Euro USD to come up a little bit higher. I think we might get stopped out, but it doesn't really matter too much. We're still testing, and we've got that formula in place, so we're not going to have any unexpected issues with the formula. It's locked in essentially, so everything that we see should be correct because it has to undertake those checks. It's got to be a large move on the day, and it has to check the failure rate, and it will only open a trade if the failure rate is high, so the herd are getting destroyed. That's the condition. We wouldn't open if they were getting paid. They have to get destroyed. Okay, so it might mean that EU will result in a loss, but like I say, it doesn't matter. We're still looking long term anyway. And let's look at your indices and gold and things. Gold, well, they've gone long, so we can create a box, and this is creating a supply because they've gone long, and so there has to be someone to take the other side of that trade. I think this is the right candle, so you can see how this is going to be a resistance now. Okay, and so we come into this support. We wicked into it. We might wick again here, and it's worth noting the SLC is at 1940 and 1985 for the SLC. So the stops are very wide. If they continue to buy, I think we're going to come down and raid the stop loss cluster below. Let's look at your DAX. DAX has just been a complete beast, and that's quite naughty. It looked like a trap. I said it looked trappy, and up we come. We're going to be sideways, so we're going to see a lot of naughtiness on price action. So nothing, we can't comment on the direction. We probably should be saying it's toppy. Look at the the ratio of long versus shorts. It's very, very, very extreme. So I should imagine this should fall, and then it might change the sentiment a bit because we're too sideways. S&P, and we are chopping a lot, moving a lot more on the sentiment compared to DAX. They had sold it just, but we are slightly sideways, and you can see we're making a triangle, and if we break this triangle, it would be rip, rest in peace for the bears. I think we're not as skewed as DAX. It's worth noting, but We might come down to some supports potentially. 4581, 4577, and it's kind of hard to draw a box, but they had sold it here, so we could probably draw a box. I wish it would make it clearer. That line could be darker, you know, the corresponding line, if you can see. It's hard to see. Maybe it's this one. I won't bother drawing it because we're just sideways, aren't we, really? Um, God, blimey. I have to take a guess at that. Yeah, it's this one. Cool. It's difficult. I think it's because the gradient background doesn't help. It might be quite clear without the background. So it's this one. No, it's this one. Sorry. We got there finally. This is a support because, well, no, they sold it, so price went up. Yes, it's a support. And so you keep an eye on that level and then that level. So 4578. So you've got double support basically. 4588. So we might come down and test it. I think it's the gradient background. I think that's the problem. We looked at DAX. It was fairly, and we're going to do a stop loss cluster video after this. We're going to look at some SLCs, which I think should be quite useful. I want to be looking at cross yen because I'm interested in the size of the stop loss clusters, and I think they're probably going to get raided. So they sold it, so we can put a box here, and then we can wrap up, and then we'll look at the SLC video. But I guess it won't be like a common thing. It's just that I'm kind of interested in the SLCs for cross yen, and that's it. So they sold it, so therefore, you know, this is going to be a support, and that's it. So I'll wrap up now, and we can do the SLC video. It might be worth mentioning that Sturz Tools had a revamp. It's looking a bit different. We've got a basket view on the price performance now, so I think that should help. And I just tidied it up a little bit, and this makes more sense now, the data validation as well. There used to be like some letters in here, DWM, and now they've gone. So that's interesting. All right, so inevitably we're going to be at a point where the indices can't go up any higher because there's going to be no bears left. They're going to get absolutely destroyed. And once the bears have left the casino, then it will mean that we're probably topping out a little bit. And that's it. So remember to be careful. Very tricky because of the fact that risk is on and off and we're fluctuating. We're very much risk on, but if we're topping out, then you know we could be quite risk off. And I think the Dow Jones is on a very much of a bullish streak where we haven't had a down day in something like 13 days or something. Well, it's a period of time that we should have a negative day historically, statistically as well. So we've got to be careful, and we might be teetering a little bit on risk appetite. If we do, that's good. Then we can get the dip that we want, and then we'll buy nice and low, and then we'll make lots of profits. So be careful. I'll speak to you guys soon.